Hi, Bismillah ar-Rahman ar-Rahim. Good afternoon, مساء الخير جميعا. It's our honor and the pleasure to be with you in this valuable session about one of the hot topic or very important topics, especially in this current context. Maybe at first, I would like to thank, of course, EBI. And in 30 seconds, I would like to say EBI is celebrating 30 years. I'm celebrating 32 years in banking. I was honored to be from day one with EBI. Same as Dr. Abdelaziz Nosir mentioned yesterday, the relation of bankers start with joining the banking sector. I am a live case for EBI. From day one, I entered as a student, as applicant, as since then being instructor and advisor. So EBI is an important player, of course in training, but also as a think tank. And as we are talking today about SMEs, I started personally SMEs with EBI. In 2007 or 2008, with establishing SMEs unit, Madam Laila was the head, and EBI director was Dr. Hila Said. We started SMEs Heads Forum, and so on, so forth till today. I'm honored to head SMEs committee in Egyptian Federation of Egyptian Banks, and to be in this think tank platform of EBI on this session. I'm glad also another point Dr. Abdelaziz said, is EBI a local institute? No. And this is why I am honored to have these distinguished colleagues and masters of SMEs from different nationalities and extensive expertise about SMEs in almost many or all parts of the world. To give you a structure, of course, we have with us Mr. Andrea Ruepp, Head of Promotion of Access to Financial Services of SMEs in Egypt, GIZ, the German cooperation. Second, we have Mr. Basel Chaban, Head of the Risk Management Competency Center, Frankfurt School of Finance and Management. We have Mr. Ahmed Fouad, Head of SMEs Division at QNB National Bank Egypt, QNB Al-Ahli Bank Egypt. We have Mr. Hassan Sabbah, Senior Operation Officer, Technical Lead IFC. Last but not least, and best for last, our lady, Miss Manar Korayem, Women Banking Champions Program Lead, Africa IFC. Our panel will be structured as we'll start on the sequence of speakers. Mr. Andy will present or identify the gap between banking offer to SMEs and expectation and demand of SMEs. Then Mr. Basel will draw to us the ecosystem of SMEs, highlighting some success stories and the different component of SMEs ecosystem. Then going down to earth, we will elaborate on the puzzle and the ecosystem, Mr. Basel. So Mr. Ahmed Fouad will cover digital banking and open banking, which of course, both of them is very important development in SMEs arena. Moving to Mr. Hassan Sabbah, IFC, he has extensive experience in Latin America, in Africa, in Egypt, in Middle East. He will talk and elaborate on SMEs success stories and financial inclusion. Again, best for last, Ms. Manar Korayem will cover woman ownership, woman entrepreneurship, and entrepreneurship in general. So before I give the floor to Andy, of course, we will talk today about SMEs globally and in Egypt. And our role, of course, is to link both. And this is EBI international platform, bringing international expertise to this whole and to Egypt. So we link or localize the international expertise and success stories into the local market. In a nutshell, SMEs in Egypt, I call, now we are almost in the third generation, because as I mentioned, early 2007-8 was the start-up maybe of SMEs business or banking in Egypt. Few banks are there, mainly National Bank of Egypt and the National Societe, which is QNB today, NSGB. Then big evolution end of 2015 when Central Bank introduced for the first time in Egypt the common definition of SMEs mainly by sales. And stipulated banks to reach 20% of its portfolio for SMEs lending in 4 years' time ending 2019. The second generation of the industry started early last year when Central Bank announced the new regulation obliging banks to reach SMEs portfolio 25% by end of this year. Of course, in parallel with the different initiatives and support to SMEs, lending them at subsidized interest rates, mainly 5% and 8%. So this is the nutshell. Where do we stand today in Egypt SMEs? We leave now the floor to Mr. Andy to link the Egyptian case with his international expertise. Please, تفضل, the floor is yours.
Thank you.
Yes, he has slides.
Thank you. I don't have slides, but it's
No slides,
way more comfortable standing here than sitting and having the notes on the iPhone. Good afternoon, everyone. It's a pleasure to be here. Thank you very much for the invite. Bridging the gap between SME expectations and bank offerings. I think we should start with a reality check. What are our expectations? What is the expectations? Let me lay out what kind of expectation I have. And you will see in a second, I will exaggerate a bit. So imagine a SME walks into a bank. It has all the data prepared, all documents, all files are ready. The balance sheet is rather strong. The P&L is impressive. The bank only needs a few minutes to assess the creditworthiness and disperses the loan within 24 hours. Based on competitive terms and individual conditions. How does that sound? Impressive, right? But I think the reality is, we all know that, we are still a bit far away from that. SME business is still very individual. It is still very tedious business. There are many expectation gaps on both sides, actually. The SMEs have very high expectations, and the banks, of course, as well. My job today is, as part of this wonderful panel, to point out these expectation gaps. And I say that deliberately because, as you see, I'm from development, and I want to avoid that you think the development guy is only speaking about the problems and let the other fellow panelists find a solution for these problems. Some of you know, of course, how GIZ operates. We in GIZ, together with you, we identify the gaps, and then we find someone else to fix it for us. In that case, that's very often Basel from Frankfurt School. And I want to take that opportunity to say in front of all of you, thank you to Basel for all the work he's doing for us, for Egypt, for the financial sector, for the Financial Regulatory Authority. Thank you very much. That deserves a round of applause. That was now important to me because in a few weeks, I think Basel and I will have negotiations about further contracts, and that should give me now a bit of a leverage because he's sometimes a bit tough with the fees. So in the following minutes, I'll try to explain a few expectations gaps. I think they are important and important that we discuss about them. It will be about SME performance, viable SME business strategies in financial institutions, of course technology, but also the macroeconomic framework. So the first gap I see, SME overstate their performance. I think we all know that, right? That's happening. And we all know the stories about SME producing more than one financial statement. One is for taxation, the other one is for the bank, the third one might be for themselves to display the true picture, and sometimes there's even a fourth financial display, a financial statement for the families, or as I inappropriately sometimes say, for their wives. And it's of course okay that everyone wants to present oneself in the best possible light. But given all the uncertainties we have, especially in emerging markets like Egypt, bookkeeping and external audits, we all know it has some flaws. And that leads, unfortunately, to a gap in trust, so that there's a rather big gap in banking with regards to trust between the customer and the banks. And as a response, yes, of course, we ask for collateral, but then we find out the collateral is rather weak or not even existing. So what remains, and it's the first gap again, a huge trust gap. And that is, I admit that, not always easy to bridge. So the second gap, financial institutions lack a viable SME strategy. Let me tell you a very brief story about my last position with GIZ as a program manager for the financial sector in Southeast Asia in Myanmar. It was really amazing to see how many banks in this least developed country opened SME departments. So we, in the developed community, we thought there is lots of progress. But after a little while, we found that some of these banks only opened SME departments to attract funding from DFIs or technical assistance from GIZ. Smart strategy, but by the end of the day, it unfortunately was only window dressing. And I admit it's not an easy job to build a viable SME business strategy around these huge uncertainties in emerging markets. Many things need to come together to achieve that, but most important is a clear direction from management. You as managers, you as decision makers, we need to make sure that SME is really a clear business segment. It's essential that we want to earn money with SMEs. The third gap, technology is having a huge potential, but I think we have not really deployed the right technology to fix the SME gap. Lacking technology solutions are, from my point of view, one of the biggest reasons why SME lending is still rather tedious for all of us. Collecting real-time data from SMEs could be a powerful tool to overcome the trust gap between financial institutions and SMEs. We need to go pure digital, then we are reliable and fast, and maybe we are then in a position to get to the true picture of what the specific SME is about. And I think if we really collect this data, then we are eventually in a position to also build reliable scoring models. And this, from my point of view, would be the basis that we eventually really are on the right track to have a fully automated SME business strategy in place. So having the right technology for SME lending addresses several gaps for me. It cuts our processes short, it cuts the cost, and by the end of the day, we are in a position to adequately price the risk of these SMEs. The last gap I want to mention is the distraction, the noise that is sometimes coming from the macroeconomic framework. Of course, when we think about our lending strategies, the economy is something we care about, we worry about, we think about. And we all know, and it was mentioned even in a panel before, the economic outlook today, if you ask me, is not looking so good. Inflation is back in the Western world. It has always been a topic in Egypt and other countries. Of course, the pandemic is still a huge topic. Supply chains are being disrupted. We have a war in Europe. And I think you can, of course, assess the impact of these macroeconomic framework conditions much better than I can do. But I think it's fair enough that I say today, praise for impact. The situation is not easy. I totally understand that we might be a bit more risk averse in this kind of situation. That's clear, that's prudent, and that is simply what we need to do when we run financial institutions. But striking the right balance between taking and avoiding risk has always been the core job of all of us. So regardless of all of these macroeconomic framework conditions, I think the Central Bank of Egypt is doing a wonderful job to promote access to finance for SMEs. We all know there's a very strong regulatory target in Egypt. I think it's 20% of the loan portfolio needs to be dedicated to SMEs. This is also not easy, but I think once we have achieved this target, we could also claim that we have closed this expectation gap to some extent. So last point, what is necessary to achieve this? I think it's again about us. We need real dedicated leadership from the management of the financial institutions. We need to create an environment of true learning. We need to make sure that our staff can try things and they can fail, but it's our duty to make sure that we learn from these mistakes. If we then manage to align our purpose, our strategy, technology, and operations for successful SME lending, I think then we are on the right track, and then we can close these expectations gaps. Thank you.
Thank you very much, Andy. Having spent long years in SMEs, I can see that you are affected with staying in Egypt. Because, of course, the gaps, I will elaborate on one or two, but it's the first time to me to hear this distraction and noisy. Because I think this is more a case of Egypt where there are many things are, getting together, many forces, dynamic forces of the market, of the stakeholders making this noisy. Well, maybe to elaborate in a minute, trust. Trust is, since we started SMEs long ago, trust. And I recall important slide of EBI, one slide, how SMEs see banks, how banks see SMEs. And it clarifies no trust. By time, as SMEs I mentioned, has been working with banks for more than a decade in Egypt, now we should have trust. But is it the case? No comment. Type uncertainty and increase of risk. What banks are doing? Are banks getting close to the market, to the customers, supporting them? Or some or few maybe, banks are reluctant to join the noisy and support in this situation? To end my statement, you remind me, when I first started working in a bank, I had a German client. So I told him, I was very young, smart guy. I hope I'm still smart. So I told him, I learned that banking is about trust. So they taught me, don't promise the customer the weather will be sunny, but promise to give an umbrella when it rains. The German client told me, we know this in Germany, and as client, we have different code. Banks give you an umbrella and take it back when it rains. So this is the case now. Are we giving more umbrellas to the clients or taking the first umbrella? I leave this hard question to Basel, to Mr. Basel, to give us the success stories, the ecosystem, how to fill this gap identified between banks and SMEs.
Yeah.
Please.
With pleasure. First, again, thank you very much again for having me. I promise this is the last time I'll be on the stand. You're not going to see me again. Twice a day, more than enough. I think we have a presentation also. It's really hard to follow after Andy highlighted almost all the key points, and he put the ground nicely for the presentation right now. Before I start, I just highlight, this is a very dear session to me. I mean, I have always the pleasure to work with Andy and Dr. Antably, and of course with GIZ and Banque Misr. We've been working for the last 3 years. I always enjoy the interaction and the work with them, and of course this panel as well.
Please.
So, again, 10 minutes, very quickly, the ecosystem for the SME. And let me start by, I was just thinking about this idea by story. So my fiancé and I, we like to travel like everyone. And since the COVID-19, traveling with airplane and trains are not fun anymore. So we start driving cars. And we have this small convertible, which is very good for a city like Frankfurt, but it's a disaster for long trip. Last time it's broken in Netherlands, ruined all the vacation. Never again, we decided to buy a car. Sit on the couch, there is an app to buy a car or to search for a car. We were never planning to get the car immediately from the app, but I'm not the best person in understanding the machine behind car. I like motorsport, I like driving, but whenever you open the hood, that's it, I'm out of the coverage, and my fiancée even much better than me. She knows all the parts. And so we start looking at the app, and we ended up buying the car on the same day from the application, super lazy, even we ordered it to come to the house. Couple of weeks later, I was meeting with my personal banker. We were in the office and then in the bank, and this is the connection to the ecosystem. And I told him we bought a car recently, and he was like, why you didn't finance it through me? I mean, I would have given you the best rate. I'm your banker for 10 years right now. Why you bought it from AutoScout, whatever, this application? And there was two reasons why I bought it. First, when I bought the car from this app, I got the car, I got the insurance for the car, and I got the service that come for the insurance and everything, and I got the financing of the car. So the same app offered me the car, the banks or the financial service provider who will give me the car for installment, we didn't want to buy it for cash, and all the security and insurance I need in one marketplace, one stop. And when we were looking, we saw that the banks need 2 days approval, while the app immediately. Lazy enough, we said we're not going to wait 2 days, and we bought it. Now, what that means, now the marketplace, and this is what we want to discuss like now, the ecosystem. I'm a retailer, I'm not an SME, and that was so important for us, these small details, that we have all the services in one shop, one marketplace, and the time, the difference between instance approval for the loan versus 2 days make a difference for me to try even new financial provider over my bank that's been working with 10 years. And that's I mean, a very quick starting for the SME banking, and you will hear a lot of work. What does it mean, SME banking ecosystem? That means banking marketplace, value chain, look to the fintech, digitalization, digital payment, online payment, POS payment, agent payment. What Andy nicely mentioned about the credit assessment, risk management, very quick online, what we call it now, immediate credit assessment or online scoring, rating model, the turnaround time, the decision-making time, product pricing for the SMEs, how we make the product pricing, how we make risk-based pricing, innovative finance, service aggregators like the marketplace where I bought the car, all the service in one places, mobile wallet, e-commerce, all this buzzword you will hear. And a lot of banks I know in Egypt and beyond thinking about how I'm going to build the ecosystem for the SME. What's the step to build it and how it's been done. And I know a lot of banks around the world start working. It's a long journey, long project. We'll try to unpack this project in smaller steps. First, if you want to build an ecosystem, there is 3 types of ecosystem around the SME. I'm not speaking about retail, about the SME. 3 types of ecosystem. And before we speak about ecosystem that means you offer everything the SME want. It's not just only traditional loan. The SME want payroll. The SME want services. The SME want maybe legal advice. You try to offer all of this, whether you offer it directly as a bank or through your partners. You will become the trusted person in the middle, and that's what Andy mentioned. A trust of the bank, despite all the study, as a consumer, we trust our doctors and our bankers the most. And the wife, the husband, of course. So these 3, we trust our bankers. We still, despite all things, we trust the banker. They know much better. They have our money, for God's sake. We're going to trust them definitely, otherwise we are in trouble. And that's why building the ecosystem for the SME, that means providing all the services that the SME provide, need to become your favorite service provider for all financial services and beyond. Let's look what type of ecosystem we can build. The first type is segment-focused value proposition. Segment-focused, that means you build an ecosystem for a specific segment. Let's say for doctors who has small clinics or small hospitals. So you provide all services, doctors, salaries, services. You provide for them financing or equipment. You provide for them maybe personal loans. So all the services offered in one place. You finance their research. Even you put them sometimes for a platform where they can meet, you can host. So you provide all the services for one sector. You take one sector and say, as Bank X, I'm very good in this sector. I'm going to provide the full ecosystem for the SME in this sector, maybe agriculture SME or whatever. The second type of ecosystem is live event ecosystem. So you provide all the ecosystem of one important event that SMEs can go through. An important event could be startup. That's an event, important event. Going internationally, that's an important event. Acquisition and merger and acquisition. So you will say, I will be the bank of merger and acquisition. I will be the bank of startup. I will be the bank of international trade. And I will provide not only, if I will be the bank of international trade, I will provide only the credit line. No, I will provide everything. I will put them in contact with the German Chamber of Industry. I will create all the ecosystem around it. Finally, for a specific painful area. So there is a specific need the SMEs want, and you build the ecosystem around this need. One of the very famous needs, all SMEs, when they start a business, they want to secure payment, and you can be the bank for online payment for SMEs. You will sit in every platform and provide the services between the client and the SME. These are the three types of setting the ecosystem. Let's think how we're going to build an ecosystem. I've met several banks around the world, and I know some banks who still building ecosystem for SMEs for 3 years. And they said, this is a huge project. We've been working on it for 2, 3, 5 years. Indeed, it's a huge project. But remember, even the biggest ecosystem and marketplace, Amazon, it started only as a bookstore, and now they have all the service providers. So what's the step? First, from the 3 different approaches we saw, choose your approach. Which type of ecosystem you want to build for your SMEs? Are you going to focus on live event, on one sector, or in one industrial? Choose it and focus on SME challenge. Don't offer what everyone offering. Try to find a solution for it, one of the challenges that SMEs are facing. Move to the next step. Start with what we call it minimum viable product. Don't wait until you have the perfect marketplace or the perfect ecosystem. It's not going to happen overnight. Start first. Be the first to go to the market. Be the first bank saying, we have an ecosystem for SME, but right now we have only one services. And that's what Amazon started. They were selling only books. Now you can buy everything on the marketplace. So start with the minimum viable product. You have this product, go online, go on the marketplace, start with it. Third, always from the beginning, consider IT. You cannot build an ecosystem right now anymore just with branches. You need to consider infrastructure, you need to consider IT, you need to consider what's the system, what the data you will need. And finally, yeah, I mean, I don't know how to say it, maybe it's a bit sound greedy. Think early about monetization. From the beginning, ecosystem, and one of the challenge bank face when you speak about ecosystem, you want to convince the CEO, the executive management board, they saw it as a service that doesn't generate profit, which is wrong. This service should be a new revenue stream. So think from the beginning, how are you going to charge maybe SMEs with some fees for the services? And trust me, SMEs will be happy to pay some extra charges in return for trusted, provided financial services that solve their challenges and problems. These are the 4th step to easily establish what we call an ecosystem, and any type of ecosystem, whether it's marketplace, which is a full ecosystem for the SME. That's really much reflect of what Andy also mentioned. What's the gap? What SME needs? And all SMEs said, we need faster digitalization, we need a personal approach, and this is from survey in Europe, unfortunately. We need improved credit service, quick decision-making, scoring model, turnaround time reduced, and always SMEs ask, we need an ecosystem. I don't want anymore only a bank. And 10 years ago, that was a privilege. We could do it. We can stay only bank, provide only loans. We can provide more package, full package of services, maybe advisor, maybe network. This is not an option anymore. And we will see later on why, because while banking as a service is essential, there is a lot of other providers can do what banks do, particularly when we speak about fintech, and that's increased the pressure on bankers to be more creative, to become more client-centristic, focus more on the client, and serve the SME client in a better way. I'm not going to stop on this slide. This is some ideas what in the last 5 years we saw in Europe in the SME service, and these all new service provider for SME banking or SME financial services that banks didn't offer. These all huge opportunity in one hand, huge project, amazing companies, but on the other hand, they are lost business opportunity for the European banks. They could have offered this. A very good example, Klarna, which is an online payment model. Deutsche Bank could have offered this, but they were slower and someone jumped in and offered this, one of the services. So you have a service in payments and accounting and admin and e-commerce and banking and lending. All these services have been provided and will be provided by alternative financial services provider. For some reason, I brought some example from the German bank. Might be not very much relevant, but I just want to show some example within the ecosystem what banks could offer and can offer beside the traditional banking. I mean, if we can take very quickly look to the Commerzbank. I'm not going to go through the whole list. Very newly, they saw a lot of opportunity. Instead of only financing startups, let me build a small incubator. And incubator used to be an expensive thing because you need the whole stuff to be. Now, a small incubator of 2 stores can have a 20 digital fintech company where everyone working from home, and you have only the founders sitting, having small meeting, and this platform for exchange. So the Mine Incubator, which established, I think they changed the name now to Nucifer. This is a business or fintech incubator by Commerzbank. They have another product, and there's what important. There's 3 ways for this new service. And this is the partnership between banks and fintech. The first approach is own development, the first line. So German bank developed some new ideas for the financial service beyond the traditional financial service. The second approach, acquisition. You go aggressive in the market, you see a successful story, a successful fintech, and you buy it. That's it, end of discussion. Banks have capital, have liquidity, and they are able to expand their service by buying existing fintech. Finally, some partnership. You have a very strong fintech provider. You cannot buy this fintech provider. You cannot provide better. Why you don't partner with them? Like Apple Pay, like Google Pay. This is something way larger than being able to acquire them or copy the experience. So you build some partner and you offer. So my banks in Germany offer me the ability to use Apple Pay through my bank account. Yeah, I mean, this only example, I think one of the nice example, if I'm not mistaken, also from Commerzbank, is a cooperation between Commerzbank and Raisin platform. It's called Weltsparen, which is a platform because of a lot of SME has some cash and they want to put it in a deposit. In Europe, we have a very low interest rate, or we had a very low interest rate. So this interest rate, this platform gives you an option to find different places where you can put your deposit and get higher interest rate. A quote, the world is not collapsing, but let's just a quote to mention, Bill Gates once mentioned, banking is necessary, but banks are not. Doesn't mean, but that means he was thinking, and this is what back in 1994, that I am as Microsoft, I can offer financial services. Apple can offer financial services. Facebook start thinking about even having their own currency, the Libra, if I'm not mistaken. So they would have the infrastructure, they have the financial resources, and they have the technology to offer financial services, and that's also one of the challenges that banks will need to adapt and quickly adapt to be able to offer these services. A real example, I think that was last month. So you know the Buy Now, Pay Later by Apple. It's a service from Apple on their Apple Store, and this service was provided through Goldman Sachs as a financier for these services. A month ago, Apple said we can do this financing directly. We don't need Goldman Sachs anymore, and they sidelined Goldman Sachs and started providing this service directly. So when you buy something from Apple Store on a credit right now, your credit doesn't go to financial provider, it doesn't go to external bank, but directly financed by Apple. Yeah, the most important slide. Thank you very much. I hope it was helpful.
Thank you very much, Mr. Basel. Indeed, a very impressive presentation. And as I was within the audience this morning, I can state that this presentation is much better than this morning. Not because this is our panel, but maybe because I'm business-oriented, and also this is very comprehensive, but pointing out the different solutions in the ecosystem. Thank you very much. Maybe in a nutshell, 2 points. Segmentation, as you mentioned. I always mention 3S. Segmentation, scale, speciality. SMEs on its own is now a big segment or segments, micro, very small, small, medium, etc. And they have huge needs. And as everybody knows, there are majority number of clients, number of labors, etc., etc. So it's very important to focus. If you are big bank, you have big scale, so we can make more segmentations and more speciality in products. Or else to focus on certain sub-segment with what we call product champion to excel in one or more products. But as you mentioned, it's if you don't do the other, if you are a large bank and one-stop shop, universal bank, perfect. But if not, what will happen? You will face the competition. You have to rely on the ecosystem and the open system, and maybe, as you mentioned, agility or minimal viable product to rely on being quick and keep developing your products to get closer to the customers. Before I leave the floor to Mr. Ahmed Fouad to link on this digital arena, Mr. Basel threw to us, one statement about open banking, which Mr. Ahmed will focus. Because Mr. Basel said, now we have Amazon, we have Facebook, we have Apple Pay, etc., etc. And of course, we are in the era of data. We talk about data analytics, artificial intelligence, machine learning. So we as banks, especially big banks like Banque Misr, for instance, or National Bank, we have huge mine of data. We have huge treasure of data. But with open banking, those giants will jump in. So now I leave the floor to Mr. Ahmed Fouad to tell us about digital banking, and maybe to focus also on the focus on the critical success factors of digital, because I keep in mind what Mr. Chris, it was perfect presentation yesterday, that he mentioned the high failure ratio of digital projects. Please, Mr. Ahmed.
Thank you, Dr. Antably. First, I would like to thank ABI, of course, for giving us the honor to join this important discussion. Personally, I believe that ABI, as we are speaking about the SMEs journey, was a very strong pillar in providing the banking system as a whole with real access to the best international practices, as well as the best tools and materials for certifying the teams that are now leading this business on the ground. So thank you, ABI, first. Moving forward to the topic, I would like to take a minute to go back to what Dr. Antably was saying about the starting of the SMEs business. I believe 2015 was a real change in the mindset of SMEs. It's a real changing date. SMEs before 2015, we didn't have a real market. It was a topic that in many banks, it's a nice to have topic. After 2015, I think CBE strongly paved the way for SMEs to grow in Egypt. Starting by the unified definition, and for the first time, we are talking the same language. First, when anybody was talking inside Egypt or outside Egypt about SMEs, we usually start with a familiar question, what is your definition? Now we're talking about the same market, same definition. CBE then hit both supply and demand side. When we speak about the supply side and the banks, as we just all know about the initiative of reaching the 20% and then targeting the 25%, it was not only a target obligated for banks, it was accompanied by a series of subsidized initiatives that from the bank side was very profitable, and maybe as my colleagues in the other panels of risk was talking, it can also cover the bank's cost of risk. So it increases the bank's appetite towards this sector. On the demand side and the customer side, we all know that the SMEs was not really accessing or having real access to finance. The subsidized interest rates made them think twice and think more to go into the formal sector outside the informal sector, because they believed that the cost of going into the formal sector can be subsidized by this very low interest rates. At this time, many banks didn't have the infrastructure. They started heavily to build their business lines and related infrastructure. They started to hire the manpower, train the manpower, started to make the cycle, the processes. Talking about digital was a really challenging topic at this time. However, it was a really competitive topic for the banks who started to move towards digitalization. And if I can classify this important topic, I think banks started first targeting the liability side, all the payments mean, many point of sale, credit cards. Now we see the QR code and the merchant wallets. It was mainly heavy investment in the liability side. At the asset side, which was a main important topic for SMEs lending, banks started first to digitalize their internal process, which, as I said, was not on ground. There was no process. So they started first the traditional process, and then they started to digitalize this process. Many banks started with the workflow system, having for the first time a dedicated turnaround time that can be really calculated. As my colleague was just speaking about the importance of the timing for the SMEs, so now we can see many banks having a competitive turnaround time and end-to-end time. Afterwards, the banks started to invest in the lending tools. First of all, we started to move very heavily, replacing the traditional lending credit proposal memo into a scoring system, a rating system, and automated systems that allows electronic inputs. Nowadays, this investment turned to be real products, real digitalized products. Let me say that COVID-19, although it has a lot of paramedic difficulties for SMEs, however, it was a real entry for many customers to start using digital channels. Because before COVID-19, we had lots of products ready for use. However, the customers were still willing more to deal with the physical branches, with the physical RMs. COVID-19 paved the way for the usage of these digital products. We are now seeing lots of banks offering complete end-to-end digital lending programs, maybe with small amounts. Another products, we can say that it's semi-digitalized with larger amounts. Lots of banks who started investing on the liability side, as I was speaking, they are now tailoring products. We are now having products supported by the point of sale proceeds, and recently by the QR proceeds. I think the concept of open banking that Dr. Antably was speaking about is a real threat that we must think about, because banks usually have very, very valuable data. But now the concept of the open banking, you can see a private company specialized for lending and having the authority from the client to see the data, to see the behavior and pattern of this client, and so offer the lending. We are having a huge important data. That's why banking sector now is giving a great importance to data analytics. Data analytics, I think it's the coming paving road that will deliver more digitalized products depending on the behavior, moving from the traditional scoring to the behavior scoring, from the traditional ratings tools to the behavior rating tools. I think this will be the coming digital challenge that the banks should move fast in order to avoid the competition. Last but not least, I think investing digitally in all systems related to monitoring of irregularities, monitoring of early warning indicators become a very important topic in all agendas, given the current, let's say, very difficult market conditions. So I believe that this important topic will be strongly addressed during the coming time with banks. As I said, digitalization is the main competitive edge for SMEs for the coming time. Thank you very much for your time.
Thank you very much, Mr. Ahmed, for covering this crucial component of SMEs ecosystem. Having talked about digital, I would like to remind you that you can use your mobiles or iPads or tablets to place questions in the application of the event, or else to have the mic after the panel. Well, for digital, of course, as Mr. Ahmed explained, banks made the back end, then started to approach the clients or offer the front end. I cannot avoid talking about Banque Misr first digital loan called Express, because it's first digital loan in Egypt, dispersing up to 2 million in 5 working days. And the big success was dispersing 17 billion Egyptian pounds in 15 months, mainly in Upper Egypt and Delta, not only Cairo or Alexandria. So this is very important progress. And as Mr. Ahmed mentioned, the workflow. Maybe also I would like to add that, and I'm challenging the workflow vendors in a number of banks to add a front end. I mean, same as Express model, enable the customers to upload the documents and track its application along the workflow cycle. So thank you very much again, Mr. Ahmed. Now we move to IFC. As you noted, we put the German colleagues together, playing the bad guys, telling us about the gaps, how to improve, and the good side, telling us the ecosystem and the solution. Now we move to IFC arena. And I'm not expert of SMEs, but I worked a lot on SMEs, and to confess, as much as I admire the German work and the Frankfurt work or school of SMEs, since we started SMEs, I am a big fan of IFC also work in SMEs, especially with ABI and the downscaling model, as well as the published papers in internet like SMEs banking, which really helped me, and also I invite everybody to approach internet for their materials, as well as Frankfurt, عشان not to get jealous يعني. To keep the panel union Basel, no jealousy. So I leave the floor, and I'm really anxious also to listen to Mr. Hassan, then Ms. Manar, about IFC expertise in general, as well as the component of financial inclusion. Please, Mr. Hassan. Thank you.
Thank you.
Hassan, the clicker.
Yes. Thank you, Dr. Antably, for this introduction. Yes, we will try to see how we can narrow down this gap and improve the financial inclusion. If you allow me, I will come back to the gaps, but in a different angle from what Andrea said. In Egypt, there is a lot of efforts from government, from CBE. You mentioned the 20% that will become 25%, and it's really specific, and it's really strong. And we saw in a few years the banks working more and more with SME. Despite all these efforts, the supply of finance is still very big. At IFC, we did studies in order to measure this gap of supply of finance, and it amounts approximately to $44 billion, or 775 billion Egyptian pound. It's a huge amount that is needed for SMEs to be financed. This amount is requested by SMEs to be financed, and we need to fill this gap. But most importantly, if we look, where is this gap? You look at the medium, that is close to the corporate, they are served. They have $7.3 billion out of the $43 billion missing. The big gap is not in the medium, slightly in the micro, but the big gap is in the small. The small segment itself have more than 50% of this gap, amounting $21 billion gap of financing. We wanted to understand why this gap of financing, why the SMEs are not coming to the banks. We did a survey, we did a focus groups to understand the SMEs and their relationship with the banks. And this is an Egyptian study. So, first of all, regardless of the enterprise segment, regardless of what is the sector, the SMEs, mainly, if we can say a big message, it's the gap in the SME products versus the needs. First of all, they told us it's too expensive. I heard there is some subsidy on the interest, but it's still too expensive. In many markets in the world, it's one of the barriers that we heard. The other one that is very specific and very interesting, repayment schedule are not adapted to my cash flow cycle. So we have a repayment schedule and our cash flow is different. You are not flexible. Banks are not flexible to my cash flow. And many of them said, banks treat factory owners like retailers. There is short grace period. It's not taking into account the sector for the grace period, so I cannot repay at the same pace than any other sector. Loan value, I need bigger loan amounts, so we have tendency to give lower amount that needed, and especially they are asking for it when you see the recent hikes in price. Slow turnaround time. I know we talked about digitalization. I know we talked about the fintechs and everything, and the car, to purchase a car and get the financing immediately. So slow turnaround time is still here. By the time I get by the time I get my money, the price changed. They are higher. So I need more. It's no more good for me to have this money. And this is the biggest problem, the lack of flexibility. Banks will put a lot of pressure on you. If you fail, they will not have mercy on you. So they fear to come to banks. SMEs are reluctant to come to bank because they fear they are finding other ways to get financed. Minority, what are those other means? Only a minority go to bank. The majority rely on savings, family, friends. And this is critical because only 15% of those who need financing goes to bank. So you're here, you are ready to finance them, but only 15% goes to seek financing with banks. When they go, we have 90% of approval rate. So it's not bad, but let them come. And to let them come, we need to adapt our way to serve them. We need to know how to serve them. We need to build specific services, specific operating model, not like retail, not like corporate. And this is where, as IFC, we are strong at helping financial institutions doing this. We have funds, we have technical expertise to assist financial institutions to better reach those SMEs. In the investment services, we have there is the classical debt financing, senior debt, subordinated debt, and we have the equity financing or by own equity financing participation or by private equity funds, mobilization and syndication with other people. But for SMEs, what is more important is the balance sheet risk management, so risk-sharing facilities. We give small loan guarantee programs in order to help financial institutions to de-risk their balance sheet and to be able to go with more at ease. You remember, they fear to come to us because we are very tough, so we help them by this risk-sharing facilities or guarantee program to go towards the client more. And we have specific performance-based funding like banking on women, financial institution clients for so funding for specific programs like banking on women. This is from the investment services. So the money is here, but we need to give this money. We need to give it in a proper way. To give it in a proper way, the IFC advisory services have expertise across various areas. MSME banking, risk management, non-financial services, supply chain, climate finance, banking on women, agri-finance, but what are they? SME banking and finance, it's a long-term advisory. It's not like I bring you slides, nice slides, and take them, do them. There is objective on long-term because the objective of IFC is to make the financial inclusion. It's not to make money. It's to make it happen, the financial inclusion. So this is, I like a lot in this sentence, the long-term advisory services. Women's markets, it's a niche. It's a market that is untapped. Manar, my colleague, will speak more about this, this banking on women. The supply chain finance. So SMEs, it leveraged the corporate client to reach the SMEs. So SMEs are client of big corporation, and they are suppliers of big corporation, and those big corporations are our customers. So the easiest way, the safest way for the bank, and the easiest way for those customers is to link them through their financial transaction between them. The bank can link them. This is the supply chain finance. The non-financial services is how we can make them more bankable, how we can make them more productive and more successful in their own business, not for us, for them. Then it will boomerang on us and our banking services. Risk management, it's the fundamental. We talked about it. I heard a lot about it in the previous sessions. We'll talk about how we can do this risk management in a proper way for SMEs, because it's not corporate, and I remind you, it's not a SME. And most specifically, most importantly, we talk about scorecard scoring. Servicing the SME is not only about having a good scorecard. It's a whole system, it's a whole platform, it's a whole holistic approach. If you have the best scorecard but you don't know how to reach those SME, this best scorecard will produce 205 per year, maximum 105 per year. So we need to do the holistic system. The agri-finance, agriculture and climate are topic of interest those days, and we have big expertise in those areas. So I told you that the SME business is a holistic, how we can build it, how it can be sustained and make the bank become best practice, become performing. We help to build the base of this pyramid. The base is important. On the bottom of the base, the fundamental is the strategy. You need to have a right strategy, SME-focused strategy. How we want to organize our SME departments, how we want to reach out our customer, what is the operating model, what are the best practice. Each bank has an objective. We talked about maybe more focused objective for each bank. So each bank has an objective. According to this objective, what are the best practice? We bring for you what are the best practice. We work together to put in place the right strategy and according to your needs and according to your execution capabilities. So if you don't have the digital capacities, we will not say go digital. But we will build together how to go digital in future, okay? The products and services. The product and services, you heard that one of the biggest gap is the product, what we are doing in the product. So we adapt towards the market needs. We need to have the real services and product that are good for them, okay? So it should go financial and non-financial, and most importantly, the lending and non-lending. The lending and non-lending. And we talked about the supply chain. In the product, the sales service, the credit risk management, all this are based, as I told you, on the strategy. And in the strategy, we need to work on the segmentation. This segmentation, we will adapt each product for each segment. The value proposition, the cross-sell, all this is depending on this segmentation. You remember in the small segment, it's from, if I'm not mistaken, from 1 million to 50 million Egyptian pound. It's a huge segment, and it's not well served because the biggest gap is there. Why don't we rethink the segmentation? The emerging small are different from the very small, are different from other criteria, maybe by sector or something. The needs are different. So the products will be different. But don't forget the non-lending. SME is not about lending only. We have proven models, and I was on the other side of the table, so I was a client of IFC. I know that I was not convinced that the non-lending is 2/3 of the income, and I did a lot of recalculation, and it's true. Non-lending is also 2/3 of the income from SMEs. So non-lending is important. Non-financial, make our customer more profitable, and you will see it with Manar. Sales and delivery, yeah, we have the alternative delivery channels. We have the value proposition, how to map the product to the segment, and where to deliver it. What is the best coverage model? Should we have in the branches? Should we have in digital? This is very important to reach. Remember, only 15% come to you to ask for lending. Where are the others? Sometimes they are in your portfolio, but they don't come. Sometimes it's in your data. So this is where in the sales and delivery, we have this customer management where we need to know and how to manage those dormant customers, how to, let me say, how to wake them up, come and work with us in a profitable way for us, in a profitable way for you. So then you have the credit risk management. It's a pillar. The credit risk management, you know, it's not about scorecard only. It's about the sourcing. It's about the scorecard, the approval. It's about the earlier warning signals. We talked about early warning signals earlier. But it's about also the collection and recovery and how to not make them fear to come to the bank, but to have the right. The fear here is more from management. Management are afraid sometimes by SMEs risk, so we have to have this fundamental. So if I have to say what are both two fundamental in those 5 modules, I will say credit risk and business model design, because the segmentation is the base of everything, and the credit risk will ease the fear of the management and the fear of everyone to go towards the market. But it's a holistic approach of the credit risk management. HR and systems, you need to be able to train people. You need to be able to train people on how SMEs need proximity. Most of the time, SMEs are served in the branches. Are your branches ready to address SMEs properly? You need to ask yourself this question. ABI did a lot of trainings, I know, but this is something important, how we can approach the SMEs and how we can leverage on them. I'll give you one case study. So it's about Banque Audi in Lebanon. We did all this with them. So now I can say with them. It is, as of December 8, we started, SME was served as a normal commercial under commercial with a classical way. It was existing, but we redefined the segmentation. We put the positioning, the strategy were strong to become the national champion. So in less than 2 years, or 2 years and a half, let's say, we disbursed 5,000 loans for more than $250 million outstanding amount. How? And it became, in 2 years, the bank became the national champion, the flagship of SME in Lebanon. How? We did the business model. The engagement helped to define the clear strategy, as I told you, positioning, segmentation. Then the product, 7 products, some of them innovative with cards for SMEs, with POS. We talked about the POS proceeds. Some of them, we revamped the existing, how we can make it easy to take a loan that usually to onboard may take in a corporate way 2 or 3 months. How we can make it easy for SMEs, how we can make it less difficult to approach us. So this is in the product design. Sales and customer management, it's a big bank. Most of you have a lot of data in their bank. So how we can use this data to activate customer? What is the activation rate? How can we use this data to make our customer more profitable? How we can use this data to make our RMs more efficient? Because it's weird, but I will say it. The profitable customer, where I reach the high potential customer, where I reach my full potential with him. Why should I spend too much time with him? I have already reached my top potential with him. There is high potential customer, low income for the bank. I need to go after them first. I need to spend more time with them first. And all this is sitting in your data. So analyzing this data, having a good customer management policy can help you to decrease the cost of servicing the customer. And cost to income is a key element for the profitability of the SME. Then, enhancing the SME capacity, we trained 600 people I told you SMEs need proximity. They go to the branches. So the branches should know to talk at least the first stage. They need to maybe serve the micro, they need to serve the very small. Maybe the more complex, we need to have someone more adapted to this. But what I wanted to tell you on this best practice, it was not only a scorecard issue. It was a full-fledged implementation that make it successful. And in other countries around the world, we will talk about other examples in the NFS or somewhere else. You will see sometimes we take what it needs to be done according to the strategy. But not only, if we want to serve the financial inclusion, we should have a holistic approach to serve the SMEs. So this is where I will, after let Manar talk about how the non-financial services can help the financial inclusion and can help by making the SMEs more and more bankable. Thank you very much.
Thank you very much, Mr. Hassan. Sorry, Ms. Manar, but I have a couple of indeed important remarks. Thank you, Mr. Hassan, for the impressive presentation, same as Frankfurt and German expertise. Thank you very much. And two very important remarks. First, you saw this pyramid. This is the component of building SMEs business line in a bank. Okay? Meaning what? Of course, two things. First, head of SMEs is not only about credit. He's not the good sales guy. But he should have also, of course, this is a core expertise or skill or knowledge, but as well to have project management expertise. Because recruiting the team, he will share with HR or HR business partner, IT systems, communication, advertisement. So I always differentiate between, same as in Egypt, the minister and the governor, الوزارة والحكومة. Same like any ministry in Egypt, في مثلا وزارة الصحة في مصر أو في القاهرة أو وزارة التعليم, responsible for the ministry all over Egypt. Okay, and there is in the bank head office, minister of SMEs, minister of retail, minister of corporate. Then there are governors, المحافظات. Okay, like counties. Okay, there is governor of Cairo, governor of Alexandria, in charge of all ministries. So the big mistakes, if I may call it, having someone very good as governor, as SMEs, head of region, of business hub, of a group of branches, to move to head office to be the minister without having the other expertise. The second point, which I discussed before in different conferences with Central Bank of Egypt, Mr. Hassan mentioned the importance that risk assessment of SMEs as SME, or even going to sub-segment as micro, very small or small. And the big mistake since starting SMEs till now, to confess, when we assess them as a corporate type, when we see the situation on the ground, when we started SMEs, some banks placed it under corporate or under retail, and maybe it's the case today. Thanks to Central Bank, he obliged banks to have dedicated business team for SMEs. And to me, it's not a surprise that the largest top 3 banks in SMEs, we can mention National Bank of Egypt, 100+ billion portfolio, Banque Misr, 60+ billion portfolio, and QNB, 50+ million portfolio, total together about half market share. each of them has separate head of SMEs reporting to the CBO or the deputy of the bank, not reporting to corporate or retail. Good news, perfect. But I claim, or I make lobbying, or I push that risk to have the same. Because, as Mr. Tariq Al-Kholi mentioned in the morning, we work with a triangle: business, quality, control. Control means risk, control, operational risk. So we as business, control and risk management, it's important component of our mindset. But same as SME's head is independent or having his own mindset, not corporate, as Hassan mentioned, same for risk. SME's head of risk should not come from corporate background. And now he is reporting to a CRO mainly coming from corporate background. So what we are trying to develop is to have same model in business, same as in risk SMEs. Sorry, Manar, but it's very important to me to elaborate on this. And best for last, the lady of SMEs.
Thank you so much.
Please.
Thank you
very
Dr.
much.
Al-Antably. Thank you, and it's a pleasure to be here with you today. My fellow panelist Ahmed Fouad claimed to speak of a challenging topic, and that was digital. So I'm taking a more challenging topic and speaking to you about women and why do women should matter to banks and bankers in the room. Before I delve into this topic and share with you IFC's experience in building women banking programs around the globe, but particularly with very successful partnerships in Egypt as well, I just want to take a moment to recognize that yesterday, June 27th, is the designated day by the UN to recognize this as the International Day for celebrating micro, small, and medium enterprises. So this comes perfectly timed with our meeting with the intellectual capital of the financial sector in Egypt, and this conference hosted by EBI, and thanks to EBI. It marks a celebration of the micro, small, and medium enterprises for Egypt. Why did the UN dedicate or designate such a day to celebrate MSMEs globally? Because of the MSMEs' contributions to achieving the UN Sustainable Development Goals. What does this mean to us as bankers? MSMEs generate or contribute 90% of businesses globally. So that's the form of business operation globally. 90% of businesses are classified as MSMEs. They also contribute to generating employment opportunities. They generate 60 to 70% of employment opportunities and contribute 50% to the global GDP. Hence, the importance of celebrating the MSMEs. I think the meeting of all bankers, and particularly in a market like Egypt, is important to think collectively as bankers, regulators, and policymakers, what is the role to support the MSMEs given their importance to drive the economic development in Egypt, but also globally. The MSMEs is the structure or the business venue to sustain livelihoods, particularly for specific segments. Working poor, and that contributes more maybe to the micro, but also for youth when we speak of innovation and new ideas and new businesses, and for women when we're speaking of women-owned, women-led businesses. I'm using this as a good leeway to share with you the landscape of women and why do women matter to banks and bankers, and what's the role of IFC and similar institutions in building women banking programs. Around 2.4 billion women of working age are not afforded equal economic opportunity. That's according to global research, and where 178 countries still maintain some sort of legal barrier that prevent their full economic participation. And this is according to the Women Business and the Law 2022 report. I will not delve into the details of what are the legal barriers, but just to give an idea of what are the challenges of women-owned, women-led businesses in particular face, for example, when applying to financing from banks, provision of collateral, as an example. So that, in a way, is impacted by the legal barriers of asset ownership and so forth by applying and providing the necessary collateral. This is directly impacting women businesses globally, and the result is a financing gap for women, to which Middle East and North Africa region is the largest contributor, coming at a 17% share. This led to IFC and similar institutions to focus on how to promote the financial inclusion of women and how to collaborate with the financial sectors across the globe. IFC particularly has partnered with 124 institutions globally, financial institutions in 64 countries. And I'm honored to be here in Egypt with the Egyptian financial sector to recognize as well the partnership with Banque Misr on developing ZET, which is the first comprehensive women banking program that was launched recently in March, but also the exchange and collaboration with the Central Bank of Egypt to recognize women-owned, women-led enterprises through reporting requirement from the banks that was issued in 2018. IFC focuses on partnerships with regulators and financial institutions to achieve three things, and I'll put it in the most simple format. One, it's to recognize. Two is to design, and three is to deliver. Recognize the gap, so we spoke of the gap, and IFC invested in conducting research, needs assessment, market needs assessment. These are all investments that maybe banks are not investing in as much resources, but IFC comes in to provide data, market intelligence, to share and shed light on market opportunities for banks to grow. The second is to design. In response to the recognition of the gap and the identification of the needs, we partner with financial institutions that are willing to take the bold step and venture into segments that are untapped, unserved, and example is the women segment, and to design gender-smart solutions. So solutions, services, products, not only products, that's why I started by speaking of services and solutions that take into consideration the needs of women that were identified. And last is to deliver value to the women segment, but also to drive value from the women segment. And I'm keeping this to be the last point so that it's how can we demonstrate that this is a viable business segment? This is a viable business opportunity. It's not a good to have, it's a must have, because women segments have proven through global research, one, that they offer a differentiator in the market. So I'll just go back to maybe the first slide that my colleague Hassan used to better illustrate this example. This is, according to the IFC survey, is an illustration of the supply of financial services to MSMEs versus the demand of financing from MSMEs. You are the experts here gathered in the room. Can you tell the percentage of women in the dark blue segment, how many, or the percentage of women that are currently benefiting from the financial services that you're offering in the market? So it's a question that I throw to you, and maybe we can discuss over the break, but the usual answer, and maybe in Egypt in particular, before 2018, it was not possible to answer this question. After 2018, the Central Bank of Egypt issued a definition to recognize women-owned, women-led enterprises in the portfolios of banks, and now it's possible to flag, according to gender of business, by ownership or management, the percentage of companies that are currently benefiting from financial services from banks. So we should be able to tell what's the population. What we are trying to invite you to think about is to change the approach, the mindset today, and think of how can you grow the MSME portfolios by gaining a share from the light blue bar. And this is the unserved. This represents the demand that's currently not served in the market. I can confirm to you that women have a larger share across the light blue lines, and particularly within the small, where the central bank now has a target of 10% for the banks to grow the small business portfolio. So looking into the diversification of the portfolio and using the women entrepreneurs as a good entry point to build a stable, profitable portfolio of small businesses is a way to meet the target for financial inclusion, meet the business target for building small banking or small business banking portfolios, but also it's a way to demonstrate the value that women markets can bring to the bank. One, a growth in market share. Two, women have, through global research, it's also proven that they represent a good risk behavior in terms of repayment of debt. Yes, it's a new segment, untapped to the banks, and that's why we would always apply that risk hat that it's unknown, no history exists, so it's risky, fair enough. But we can use proxies, we can look into global research, and we can pilot and test and validate that this is the case for growing the portfolio. So I'll conclude with sharing with you 3 statements. One, I've shared the first question, is for you to think about the representation of women in your portfolios and compare this to the representation of women in the population. Women represent 50% of the population, so I think it's fair to expect that they are 50% of the retail banking portfolio. Is that a fair assumption? If we look into the SME banking portfolios, women globally and in Egypt represent 30% of the MSME population. What's the percentage of women in the MSME banking portfolios? It was 0, simply because it was not flagged. Today, we expect an answer of that to be around 10%, which tells us about the gap between the 30 representation in the population and 10 representation in the bank's portfolios. Are any of the bankers in the room aware of any discrimination that their institution is posing against women applying to their banks? If any in the room, please raise your hands. Okay, thank you. So that's a typical answer. Definitely there isn't. But there isn't also, but is there a sign that says welcome to women? How are we attracting or inviting more women to bank with us? And this is an invitation so that we think collectively of how can we integrate this in our strategies, how can we invite more women to bank with us in Egypt to meet the targets, but also to grow the financial inclusion targets as well. Thank you so much, Dr. Antably.
Thank you very much, Ms. Manar. Of course, women as a component is very important, not only in Egypt. And of course, many of us received foreign or international institutions telling us about what about women discrimination, women empowerment, etc. I used to ask them a question: is this advice to Egypt, or this is the case worldwide? The answer came, if you see EU last June, put a quota for women in corporates, boards in general, to be 50%. So women need a lot of support indeed to empowerment and to empower them. And indeed, as Banque Misr, I am very honored and I'm always supportive of women committees. And I always mention something to have this THAT program, the first program addressed to women. And I always admire that the National Women Council has men. Also in each bank, when there is a woman empowerment committee, I encourage myself and the management to have men, because this is very important component. So thank you very much. We come to the end of this panel, and we only have the question part. We have 10 minutes to go, so we have 3 questions here. I will start the first question to IFC, Mr. Hassan. How the banking sector should address the reasons behind the financing gap as per IFC local study, considering the risk factor?
Sorry, فيك تعيد.
Yes. How the banking sector should address the reasons behind the financing gap as per IFC local study, considering the risk factor.
Okay, so you saw in the analysis or the results of the survey and focus group that there is a gap on the product and there is another gap on the fear and the intimidation to come to banks. So I guess, first of all, you in the product should be more adapted. So we talked about in the strategy there is a strong component that is the segmentation that will serve to put in place a customer value proposition and adapted products. I talked about, for instance, the supply chain. You know, there is a gap in the this grace period issue, this loan repayment schedule. So when you are meeting the supply chain with its financial component, its financial transaction component, you are feeling somewhere one of the gap that is said. The other part is this fear to approach the bank to request for a loan. We have instrument. You talked about the subsidy of the lending. We talked about the guarantee program that should make the people less fearing to come to the bank. And most of them are already in your portfolio, but they are not asking for lending because they know maybe you will reject them, although 90% of those applying are approved. So to fill the gap is to have a holistic view, as I told you, coming from the strategy and the segmentation to value proposition, the product, adapted product to the market, to their needs. We have to rethink our approach towards their needs and not come with a standard way of serving. This is my opinion, our opinion.
Thank you very much. The second and last question is, what is needed from regulatory entities to ease digitalization of asset products? You will have 2 answers. You are lucky questioner. I will answer locally, then leave to Mr. Basel to answer from his expertise in other countries. I will apply your question on Banque Misr Express, which dispersed 17 billion. Okay, type. What we need to from a regulatory EKYC, and this of course in process. Mr. Ihab Nasr mentioned this, and more important, API, meaning what? Of course, we retrieve the commercial register of the client, but today you retrieve it from iScore against fees, fine, but as PDF. You cannot retrieve it as database. To extract and use the data as database, okay, as fields, to classify clients and give score for the how many years in business or sector or area, etc., etc. So this need manual intervention. The second, maybe also from iScore, is the iScore data of the client. Meaning what? Of course, this is confidential data. We get the borrower authority or signature to retrieve it from iScore. Perfect. But for instance, my case in Banque Misr, I have 25,000 express clients. I have authorization to all of them, and I retrieved from iScore all of them, but I retrieve it case by case. And as PDF, I cannot use it as API. Second, I cannot use this database to produce more scoring or behavioral scoring on the behavior of a segment or group of clients. So this is the case of Egypt. I leave Mr. Basel to answer more globally, please.
Thank you very much. I mean, that's a very important question. I think a lot of banks are now thinking how to move their legacy lending toward more digital lending. And the first question is, can I copy exactly the same processes from legacy lending and just digitalize it? And the answer, of course, not, because you want to earn the benefit of moving to digital platform. You need to first do the process mapping, look to the existing process, what we call it the legacy lending existing process, do the process mapping, and then think for each process how I'm going to do this in the digital world. And think twice before moving exactly each process, because the aim to move to digital world is reach more client and also reduce your operational costs. That doesn't mean you copy exactly the same legacy process, and that's what we do usually when we work with our partner banks for digitalization. We do the first thing, the process mapping. We look to the process and we create a new digital process, aim to be shorter, faster, reduce human intervention to the minimum, and of course include more digital tools such as scoring models, such as decision-making tool. And just if I will go out of the question, because I want to touch base about very important point you mentioned. As a part of the lending process for SMEs, when you mentioned about women being less risky than men, and I know this is not related to the question, but I cannot hold my thought on this. I had the pleasure to work on development of scoring model, more than 100 scoring model around the world in the last 10 years, and statistically speaking, this is not opinion, this is not feeling, this is statistic. When we create a correlation between variables and probability of default, female has lower default. In all the scoring model, I've never seen, I like all the ladies right now sitting and smiling. I've never, my team developed a scoring model where we saw male performing better. That's statistic, that's reality. There is a lot of reason behind it, but that's the statistics that prove exactly what you said, that female are less risky and more less risky client. And that's linked us, I mean, this data, this information I mentioned linked us to the digitalization again, and what Andy mentioned at the beginning, the importance of infrastructure. If the future of banking, again, repeat what we said, I think in the beginning, it's all about these four things: human, data. So you need this historical data, you need this information, you need this data structure to do the digitalization in the correct way and move toward more the SME banking.
Thank you very much.
Sorry, I took a lot of time. I wanted to touch base on this very important point.
Thank you very much, Basel. Okay, at the end of our panel, I would like to thank the audience for their kind attention and intervention. Thank the distinguished speakers on the panel. It was a benefit and a joy for me. I hope it was the same for you. Last but not least, thank you, ABI, for having us with this fruitful session. Thank you very much.